3 minutes of good evening, everybody. We are going to start out very quickly on what we were supposed to be doing tonight, which is kind of taking a look at when to take profits, which is very simple in using candlestick analysis. So, yes, Happy New Year, everybody. Hope everybody had good, safe politics. Yeah, good, safe politics. Good, safe holidays, even in spite of the politics that were going on the whole time. So, I'm going to change a little bit tonight. We'll start out with some of the things that we take a look at for taking profits. But this is going to kind of lead into, we were going to do a training session. It's going to be a full-day training session. We've rescheduled it from this Saturday to next Saturday, the 16th. And it boils down to that there's a lot of times when it's obvious to take profits with candlestick signals, reversal signals, moving away from the T-line. But there's other times when there's other indications that show up that even though we're not closing back below the T-line, it's time to start closing out the trade. So some of it is going to be so obvious and simple that it puts you in command. I like to make things as obvious as possible. It's like hearing somebody in a nudist camp say, "Boy, would I like to see her in a tight sweater." Some things are just obvious, and we're going to do that with some of these signals and patterns. And so let's start. Let's go through the market real quick. As we can see, this market trend, which was kind of just waffling for the last 2 months, has now blasted out to the upside. And you don't see anything. R. Zukowski, make sure up on the top of your screen you're clicked on screen sharing, not slides. That do anything? Okay, so here's something that that you got to take into consideration. Even though the markets were not moving up, they weren't selling off. Now, the longer this market kept moving up, you got to think, even though the market's not moving up, what's going on in investor psychology? Where they're getting more and more acclimated to the fact that the market's not selling off. So what's that do to the good bullish charts? Makes them more enhanced because there's not the fear factor, the selling fear factor. So the good charts continue to move well. This is also added by the fact that other than one day in the markets, which was Thursday, Monday, when we had that huge reversal, that could have been a sell signal. Other than the only thing that said, all right, you got to keep watch, is the fact that look what's happened over the last 2 months. The T-line has been acting as a support level. So we've had one day that was below the T-line on a sell signal. What do? If it started trading lower the next day, that was a sell signal. But we have to watch to see whether this was just a one-day aberration and that we want to see it start back up, which it apparently did. So notice what we've got in the NASDAQ, kind of a little J-hook pattern. But more importantly, the statistical result is, as long as we're trading above the T-line, we have to assume the uptrend's in progress. If we assume the uptrend's in progress, that means investor sentiment is still pretty comfortable bullish. Now, so far we haven't seen exuberance. We're starting to see exuberance because some of the positions that we've gotten into are just blasting away. And the reason for that is, again, look at our fry pan bottom. I guess I could make that a little bit more pronounced. And then your best friend breakout. We had a buy stop right here. It hit it. What about the VIX right now? I don't even know how to pull the VIX up over here. But that, remember, we're using, I don't even follow the VIX. I follow what prices are doing. Is the T-line the 50-day moving average? Yeah, I'll go through this. Let's go back to the Dow. Now, let me finish what I was saying here. Look what happened on this fry pan bottom breakout. What do we expect on a fry pan bottom breakout? A huge price move. All right, let me go back real quick to, that's not what I wanted. Here are the indicators that you want to have on your chart. Everybody in the world that manages money has the 50-day and 200-day simple moving average. That's because every major money manager around the world uses those moving averages to make their decisions about their portfolio. I get asked a lot of times, well, why don't you use the exponential? Isn't that better? We're not using the moving averages to make our decisions. We're using the moving averages to see what signals are formed based upon everybody else's decisions. That's where things are going to happen. If there's a signal, or if there's a signal, that means that was the level that everybody would start to take their, start to buy or sell, depending. What happens when a stock hits a high? Does that indicate there is a reversal? No. No, if it hits a high, that means people are buying it. We want to see whether that chart continues to look like it's heading higher. Remember, the Dow has hit a high now for many times. All-time high is a very, it could be a bullish signal. Look what happened on this chart. We hit an all-time high yesterday. And that was telling us they were supporting at the T-line and broke through this level. There's probably more upside. So, no, you don't use, well, I guess here's a better way to say it. You don't let all the other things that people tell you should or should not do influence your decision. Let the chart tell you what the market is doing. So, for those of you, I didn't finish, did I? I also have the 34 EMA. That works reasonably well. Yes, Corey, we are going to be putting out I think very soon, a 2-week free training. No, 2-week free training. 2-week free membership to the website and the chat room. That should be coming up here within the next couple of days. Keith, don't worry. We're going to sit you here as long as your butt can take it, or as long as my butt can take it. So we'll get a lot done. Let's take a look at the. So there's your Russell 2000. There's a very simple statistic. This is the T-line, the 8 exponential moving average. We call it the T-line because we call it short for trigger line or trade line, but it has a very simple a simple statistic. But the probabilities are extremely strong that as long as you don't see a candlestick sell signal and a close below the T-line, you're in an uptrend. Harry, I changed that a few months back, and it doesn't really matter. You could put the 20 on there. The 20, these are the 20 and the 34. The 34 is an exponential moving average. The 20 is a simple, but it's a very simple analysis. You use whatever is effective. And the 34 EMA works reasonably well. So that goes back into the factor that the 200 and the 50 simple moving average is what everybody's using. Those are major moving averages. The 34, the 20, anything else you put on is a secondary. The T-line is the 8 exponential moving average. And there's a very, very high probability result of the T-line. And it is, if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Simply stated is that as long as you're above the T-line, the probabilities are extremely strong you're in an uptrend. Yeah, that's the 8 exponential moving average. The T-line is this black line. Now, I could take everything off this chart and use just the T-line, and my probabilities would be extremely high that I'd be making very good money. What the T-line does is keeps you from getting whipsawed out of positions. It's just a simple combination. If you see a sell signal and a close below the T-line, that tells you there's a change of investor sentiment. Then that investor sentiment is confirmed again to the upside when you see it closing back up above the T-line. Now, we also have a little, what we call the 3T line, which is a kind of a confirming indicator of the T-line. So if you are new here and you only get one factor out of all this, 2 factors. One, the signals work, or we wouldn't be looking at them 400 years later. And 2, if you combine the candlestick signals with the T-line, and here's the, when I'm doing trainings or new groups, I use this as my most important. Yes, the 3T line is the 3 EMA. That the most powerful PowerPoint screen that I put up is the T-line. If you know that the candlestick signals are the graphic depiction of human nature, of investor sentiment, and you can assume that the T-line acts like a natural support and resistance level of human nature, kind of a Fibonacci characteristic. When you combine the two, you've got an extremely powerful trend indicator. Okay, so let's get off of that. I'm just going to go real quick to see crude oil is still in this uptrend. So that's making some of the crude oil stocks good. But I'm going to go here in the next 10 minutes, 5 minutes anyways, showing what we're going to be studying or why we use the logic in candlestick analysis to know when to take profits. First of all, it becomes very simple using candlestick analysis that when we see a pattern breakout, like a fry pan bottom breakout, here's what we're expecting, is a big strong price move. When is it time to take profits? And this is what we'll be going through next Saturday. One very simple rule is, remember we just said that if you're above the T-line, you're in an uptrend, with a caveat to that, which is the further away you move from the T-line, the higher the probability it's going to come back and test it. So this becomes an alert. Look how far away you've moved from the T-line. Secondly, look what's happened once you've gotten up here in the overbought area. This is one of the basic trainings of Japanese rice traders. Where do most people buy? They buy exuberantly at the top. What indicates exuberance? Big candles moving away from the T-line and gapping up in the overbought area. So a very simple trading strategy. is if you see a gap up, which this one gapped up today at that level and started trading higher, there's two ways to take profits. Oh, what is the 9 limited? Mike? I hate to even try to answer that because most of the time I don't even know. Somebody told me what the 9 limited was today, but I don't remember what it was. Yep, that's the answer to it. Don't need to know. All I need to know is that they're buying this coming out of a pattern. Moving average weighted, the most recent. Oh, that's the exponential. What is the upper stochastic lowers? The upper is 80 and the lower is 20. So simple logic says from the Japanese rice traders, that's right, was in a, okay, I'm sorry, yeah. This is a Chinese internet company. Now, do I know what they do? Absolutely not. All I know is they started buying this, somebody started buying this. So where do you take profits? Well, if they gap up in the overbought condition that far away from the T-line and start trading higher, you simply put your stop at where it opened. Because logic says if you're that far away from the T-line and they're gapping it up, either something great's happening, but if this is exhaustion or just wild speculation, it shouldn't come back down through this level. If it does, the sellers are in control. So that's where you take profits, number one. Or the other technique is you go to your 10-minute chart. It moved up strong, and if you see, when you see the first sell signal, that's when you start taking profits. Why would you do that on the 10-minute chart? Because that tells you there's some selling occurring. Why would you expect some selling to occur? Because your daily chart says you're way too far away from the T-line. This is a very high probability place to start taking profits. So this is not, I keep repeating in my comments going out, this is not rocket science. This is just learning what most people do. Remember we pointed out BTBT right here and had some people buying it. Now what was the warning? Look how they gapped up a few days ago, that far away from the T-line. That was the warning, the gap up. This is the area where you start taking profits. Don't you get whipsawed a lot using the 10-minute chart? Depends on what you're trading. If you're trading on a swing trade basis like I do, that I go to my 10-minute chart when my daily chart is way out of whack. So all you're doing is using a combination of the daily chart telling you be careful, you're way too far away from the T-line, move to your 10-minute chart, and that will tell you when the selling has started. What is it? A doji only on gap up. Larry, I don't know. What is it? What is it? Is a doji only on gap up? What if it is? What if it's only a doji followed gap up? That's one of your strongest buy signals. That's called your best friend. All right. Okay. So this is what we're going to be showing people is when is it logical that prices have moved way out of whack? Now, when it moves way out of whack on your chart, what's that tell you? It tells you people got huge profits. Now, if you're a trader, what happens when you have huge profits? You're going to probably start taking profits. So the first gap up is considered the doji sandwich. Now, the first gap up, I mean, right here, like a doji gap up, let me find a better one. It's called your best friend. There's the 12 major signals. so you don't have to learn all 50 or 60 candlestick signals. There's the patterns. There's about 8 of those. And then there's what we call the top rank signals and patterns. And one of them, the number 1, is the doji followed by a gap up. So in this case, yes, we had a breakout. We had consolidation, and then it gapped up again. What's a gap up tell you? Especially coming with stochastics heading up. They want to get in this with great enthusiasm. Where do we want to be? We want to be in stocks that are starting to move with great enthusiasm. All these sessions are recorded. I know people in the chat room were trading bingo. Started right here. Started gapping up, coming out of this fry pan bottom. Came up here. Where do you take profits? If this is in an uptrend, the last place you want to see, especially that far away from the T line, is them trading back below that level. When they gap that down, you close it out immediately. Do stochastics matter? Yeah, usually you want to buy. Now, stochastics matter on the signals. I'll get a better chart with the signals. You want to buy candlestick buy signals when they're in the oversold area. A candlestick buy signal in the overbought area doesn't mean anything. It's just another trading day. Obviously, a candlestick sell signal in the overbought area means much more than a candlestick sell signal in the oversold area. Now, on a pattern breakout, stochastics are usually on a fry pan bottom breakout. The stochastics are already going to be in the overbought area. But you're not buying stochastics. It's just a secondary indicator. Again, you don't want to be buying a candlestick buy signal when you're in the overbought area. So the number 1 criteria for selling is the sell signal. But if you start seeing sell signals in the overbought condition, you're starting to take profits. We saw that in the oils a few weeks ago. Sold off. When was it time to buy? We're starting to buy back again on some of these. Does a buy signal such as a bullish harami have to confirm the next day to be valid, or can 2-day confirm? Yeah, what you want to see on any candlestick signal is that if you see a buy signal, you want to see them open up positive the next day. What's the buy signal tell you? There's buyers possibly taking control, which is confirmed by the next day positive trading. What you don't want to see is it opening down here the next day. That tells you the bulls aren't there. You don't enter that trade. Okay, now I got to pull up my list here real quick. No, that's not it. Let's see. I want to take a look at gold. Gold is hovering right now. It's still in a slow uptrend, but right now the gold stocks are selling off because gold has sold off. Here's another way we're going to be training people that when you see a major resistance level, what do you want to see the next day? You want to see them go through. If you see a sell signal, you close it out. So again, everything that we look at is just pure logic built into candlestick or built into a graphic depiction. That's essentially what candlestick signals are. And that information has been conveyed to us over 400 years of the Japanese race traders showing what should happen based upon human nature. So I always go back to the very important question or statement that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's all candlesticks are, is a graphic depiction of what everybody is thinking about the fundamentals. With the market at all-time highs, is it wise to add a couple of shorts? You can. Yes, and I always advocate that that we have short positions on in the portfolio. This is the 34 EMA. Now, here is the important factor for putting indicators on your chart. Notice that my charts aren't very cluttered. I could take off all of these and just use the T-line. But if somebody says, put the XYZ indicator on your chart, put it on there. If it works, improves the probabilities, keep it there. If it doesn't, take it back off. The most important parameter of a candlestick chart is the signal themselves. And everything else is just kind of a confirming indicator. Luke, I'm sorry, I don't even know what a vortex indicator is. Okay, so, this is what, no. So this is what I'm looking at. I've got an overbought condition. We've got a doji, a hanging man and a doji. What's that telling me about my probabilities? Telling me my probabilities are starting to turn against us. We got indecision in the overbought area. I'm not closed yet below the T-line. But the rationale is this looks a little bit weak. If this even opens lower tomorrow, even though it doesn't close below the T-line, let's close out, take our profit, and let's go find another chart that looks like this. That way I'm taking my probabilities from an iffy type situation and moving it back to a strong situation. Cheryl, yes, you can add it. Now, like anything else, if you add it, now I use it more for trading, or it came from more from trading commodities, like soybeans. As you can see, soybeans had a nice pattern, and you could stay long on this as long as it stayed above the T-line. A lot of times, and I'll find some charts where the 34 acts as a relatively good. And I say relatively good. I could take it off, and it wouldn't really bother me. It's not bothering me to have it on there. Pearland, if a trade stays below a major average and goes horizontal, would you look for it to stay or leave the trade? And the answer is simple. I'm trying to find a chart that might... The answer is simple. If I look at that chart, I ask myself, is this the best place to have my money? And if it's not going anywhere, remember, the whole point of using candlestick analysis is every time we see a buy signal or a pattern set up, we know what the probabilities are. Alan, the same. It all depends on what you want to trade. Now remember, candlestick analysis was developed on the most boringest commodity in the world, rice. And the Japanese rice traders did not become wealthy trading rice. They became legendarily wealthy. They were the powerhouse. Okay, yeah, I thought I mentioned the 3 EMA. The 3 EMA also is this little green line here, and it kind of tells you that if you see a candlestick buy signal and a close above the T-line, you can get ready to buy on positive trading, and also seeing that the 3T is confirming. Well, in this case, it opened and didn't confirm. That would have kept you out of that trade. And so if I was looking at a chart like this, here's the great advantage of the simple scanning techniques of candlesticks is there's 9,500 trading entities out there. And once you set up your scans, you're going to be able to find 3, 5, 10, 15, 20, 40 good trades every single day. So if you're sitting in something that doesn't look real great, and I've had charts like this. I'll show you one that in a little bit. No, I'll do it right now. Here's what you have to do with probabilities. I went long again in WRR a little bit, or WWR, a little bit jumped the gun the other day, and then it didn't confirm. Today, gave it some time, and it didn't confirm. So what did that chart tell me? I shouldn't be here. Yes, that's what I'm getting to, Suze. So I closed out the trade this afternoon. Well, now it's trading up here. But you can't look back. When you look at this chart, with the knowledge you have at that time, it says, there's better places to have your money. So I know right now this is trading up here. But remember, we're basing our trading decisions on what are the probabilities of this one moving up or down. Well, looking at right now on the close or at the close today, what were the probabilities telling us? We didn't know whether it's going this way, or this way. So that's why we get out. I think right now it's trading bidding 570, asking 575. Okay, let me go through. Let me go through a couple more. Again, the reason I'm not trying, and I've already spent 30 minutes, trying to spend less time on the when to sell, because we're going to do a full day of that. Right now, we should be looking at what ones are making the good trade. So here's another one, Moss. Came out of this little scoop pattern. Gapped up. Gapped up again today. Where are we? Look how far away we are from the T-line. Gapped up and started trading positive. You just put your stop right here. The probabilities are going against you. And what one was I looking at? Oh, this one. The probabilities are pretty strong that if you start seeing selling way up in the overbought area, I think after hours, this one was trading down here. Remember the reason we're in the business for trading, to make profits. Not necessarily making every last little bit of trade we can. We're trying to get as much as we can. That's why we flip to our 10-minute chart. But then we can't look back and say, somebody asked today, if this does a pattern, can we get back in? And the answer is yes, but it needs to do some sort of pattern that tells you the selling has stopped. Is it a good idea to set automatic stop with broker? Yeah, you can set stops. The old fear that they're going to come hit your stop. Most brokerage firms now have the electronic capability. They can put your sell in, but it's not exposed to the traders, and it kicks in as soon as that price is hit. When you set up your scans, do you use candlestick patterns and symbols? Yes, that's the whole point. That we can put in our scans with the signals and patterns, and that's very easy. Once you do it and it's in your scanning process, all you have to do is refresh each day, and it's going to find the good signals and pattern setups for you. With today's, no, it's not obsolete. It's because the information put into the algorithms are still done by humans. SD, very simple scans, and we don't have time to do it tonight. We can do that, and we do that in the members session on our chat room. Usually on a Tuesday or Wednesday night, we'll take 45 minutes or an hour and go through the scans. So what I'm trying to, or what we wanted to illustrate on next Saturday is there are times when it's time to take profits and go to a much better trade situation. Okay, so what I want to do right now is, a lot of people have been asking for longer term trades. As you can see what's happened in Tesla. It closed up over 800 today. And it's had a nice steady run ever since that breakout right here. And what was the criteria for staying in Tesla? They could never close it below the T-line. David Bigalow, 17. Yes, I'll show you a few that I'll be recommending. I like to take my buys when the 3T line cross. Gary, that's exactly what you need to be doing. What we try to do is train people not only to identify which patterns and signals are good, but putting the indicators yourself so that you're never at somebody else's mercy as far as making decisions of when to be buying and when to be selling. Right now, I'm in the process, and I'll ask for help on this. We've made tons of money with Blink so far this year, and that's because the electric vehicle sector. 2 years ago, I wouldn't have given you a hill of beans for any of them, but now the technology is advancing so fast that we're buying the electric vehicle stocks more for a longer term basis. Now, technical analysis works well usually for the shorter term. So how do you use technical analysis for longer term? Well, if we can kind of anticipate, because of the alert that the charts gave us, that the buying was coming into these stocks or that sector, now we can go and start analyzing what everybody's thinking about that sector. So obviously, electric vehicles are going to be around. Everybody's getting into them. Apple, Ford, GM, anybody you can think of is getting into electric vehicles. And the percentage of electric vehicles are probably increasing because of the magnitude of power that is being put out by lithium batteries. So the assumption is electric vehicle sector is going to act strong probably for the next few years. What we want to do is make sure that's happening, number one. That's why we want to do our research. And then research to see which stocks in that sector are going to act the best. Okay. And Gary, I think Blink is probably going to be one of these that just has the capability of going into every gas station around the nation. Let's see. All right, so we're buying these stocks because the charts are telling us that they are have very good chart movements, strong price move until the sell signal, pulled back until the bullish harami. This is LI, excuse me. We've been in GP for a while, and this is where you observe the obvious. Look at the 34. Look at all the indecision right here at the 34. Then your inverted hammer, then your doji, then your gap up. And then what type of pattern was that setting up? Your fry pan bottom. We're staying long. Now look where we're sitting. Right there at the breakout level. Now you have at least a good trading grid, or what to say, platform to know what to do at this level. If it opens positive, fry pan bottom still working. If it opens lower, it's coming back to test the T-line, which means it's not going through this level right now. You start taking some profits. I would be buying Blink, yes. Not so much as only a short-term trade. Now, I think after hours, Blink was trading up positive, but everything was in that area was trading up positive. I've got Ride. As a matter of fact, the next one. And again, this is observe the obvious. Look where the buying occurred. There was a left-right combo. A left-right combo is your doji followed by a bullish engulfing signal. Out of the 18, hold on to your individual requests until we get where I tell Jim to do the double line, which will be at the end. More than likely, quite a few of these will be addressed as we go through. Ride has earnings per share of 5 cents, yes. But that doesn't make any difference. Remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. People are buying this one because they think the future has something going for it, and it's got a nice pattern. Workhorse, same scenario. This one's bouncing up off the 50 with kind of a bullish harami. And Nikola has been kind of thrown in the gutter, but it's starting to come back up again. Oh, CMI is there's your scoop type morning signal, or morning star signal. Yes, that one's going to act like a scoop pattern with a slingshot effect. Thank you, Matt. Okay, so here's where things become much more convincing using candlestick signals because of the patterns. For example, EXPV. Look what happened here today. I'm going to make this bigger. There's a morning star signal right smack dab on the 50 with stochastics coming up. If this trade's positive, what's it telling you? It's confirming your morning star signal and telling you the 50 is acting as support. Lots of room to come back up and test these areas. Again, this is high probability trade setups. If we can identify a number of reasons why you should be buying here, like a morning star signal right at the 50 above the T line, that if it confirms, it's telling us that this whole area is acting as support. Now, will it go up here? I have no idea. But the probabilities of heading up here or back up there is pretty good. That was the same scenario right here, that we're putting ourselves into positions where the probabilities are pretty strong that you're heading in the right direction. Now, the one thing that has helped my trading through the years is finally realizing emotionally that approximately 30% of the trades aren't going to work. So it now does not become an emotional or a ego thing that when something's not working, I don't have to say, oh man, am I stupid? Why did I do that? I can say this one's not working, close it out, and let's move on to another one. So if you, I had a point to make here. If we see the buying happen at the right place, we have a high probability trade set up for buying. We see a morning star signal right smack dab off the T line. That's a high probability place to start buying. The morning star signal is one of the 12 major signals. There's your morning star signal on NK, right smack dab at the T line, which means if it opens positive, the probabilities are that this whole trend is going to continue. Now, this is what we expect if it opens positive tomorrow, to move positive, which also helps you with your stop loss. If this expectation is that if it opens positive, it should be trading positive, where do you not want to see it trade? Back below the T line. That tells you it's not working. You close out. This is that proverbial cut your losses short, let your profits run that every money manager tells you to do, but they never tell you how to do it. The assumption is this is the direction it should be moving on positive trading. If it trades back here, the trade didn't work, close it out immediately. No, the morning star signal is just merely a down day a day of indecision, and the third day closes more than halfway up that last down day. No, we're not trading crossing stochastics. We're just seeing that we have a buy signal in closer to the oversold area. Remember, we're not trading stochastics. Stochastics is just a secondary indicator to tell us where we are. Well, it's up $1.30 after hours? Okay. All right. This is putting the probabilities in your favor when you can see a pattern. Look what happened down here. There's our cradle pattern. That's a big down day. 3 or more indecisive flat trading dojis, and then the other side of the cradle. This is the headboard, this is the bed, this is the footboard, and expect an upside move. Now, the bigger pattern is, there's your flat handle, there's your scoop, there's your slingshot effect to the upside. These are just trade setups that put the probabilities much greater in your favor. When you talk about opens higher the next day, is that right at the open, even if it drops, or is there a time limit? Mike, if I was going to buy this one on positive trading tomorrow and it opened right here, I'd say, let's wait. But then if I saw it start moving up, back up through this close, if it opens here and starts trading up, what color is this candle becoming? Another green candle. Where do we keep stop losses? That's a whole nother topic, but it's the logical place that tells you if you're in a good trade and you're in the overbought condition, where is the likely place to put your stop loss? Right now, we have a stop loss right here. But if it, I don't know what this line is, but you've kind of broken out through this level. So where should this be going? This direction. Where shouldn't it be going? If it comes back down through here, what's it tell us about this level? It's topped out again, time to take profits. So we can do a stop loss in the members area here in the next couple of nights or a few nights. But it's just simple logic. Everything built into candlestick analysis is just common sense put into a graphic depiction. So we can see what's happened with Riot. Now look what's happening to Riot up here. You got the doji sandwich, but you're starting to move away from the T-line. So what do you do when you're in the overbought area? You put your safety stop someplace where it shouldn't be trading. Fry pan bottoms are working well. Why do you use a fry pan bottom when you can? Because it has two aspects to it, even three aspects. One, you can visually see which direction it's about to go, in this direction. Two, if it goes in this direction, it's going to go a lot faster percentage-wise than merely an uptrending stock during an uptrending market. Usually wave 1, wave 2, wave 3 is going to be the same magnitude as wave 1. And fourth, third, forget how many, fifth, that if the market all of a sudden takes a big turn, usually a pattern is going to take a few extra days to turn around, so it gives you more time to come out of the trade. Kind of a small fry pan bottom, bigger fry pan bottom. That's on FUV. That's is that electric vehicle? Let's see. What is this one? DM. There's a J-hook pattern. This is what we call the classic pattern. A fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. Look where it pulled back to. Now, for you new folks, this is a very relevant observation. Look where the low hit, right smack dab on the T-line. Why is that important? Because nobody has the T-line on their charts. So it's not like everybody's waiting to see if it's coming back to the T-line. Nobody has it. It comes back to a natural support level that we can identify as being the natural support level of human nature. And what do we want for a J-hook pattern? A prerequisite is a strong price move. And then the J-hook pattern. What do we expect coming out here? Wave 1, wave 3 being the same magnitude as wave 1. Why do we call this the classic? Because it does everything you expect. Strong price move coming out of the first pattern, then the J-hook going into the next pattern. Can you use the fry pan bottom pattern on a 10-minute? Yes. I trade soybeans. I trade live cattle, lean hogs, the dollar. If I'm trading during the day, this might not be a big day, but that must be after hours. No, it must be on the wrong. Maybe they've already gone to the next. Let's see. Let's try this one. Lean hogs. Not real wild, but you can trade off the 10-minute chart. If I'm intraday trading the commodities, I'll trade off the 10-minute chart. If I see something moving big, and this is the advantage of having a chat room where everybody's looking for the same thing, when would you buy this one? Here, when it's up 100%, here, where did you buy this? That's where you flip to your 10-minute chart. Say, well, I wouldn't be afraid to be buying here, wouldn't be afraid to be buying here. Well, I might not be buying here. Don't know what it's going to do. Well, it's supported. I could be buying here. So look what this did at the end of the day. It really didn't show any selling. You could still be buying. It just kind of gives you a little bit more insight as to what's going on any time frame. Candle more short-term versus fry pan. Cradle. Oh, no, they all work. It just is a matter of where some of them are working. And everybody always asks, what are the strongest signals? They're all strong. I've narrowed them down to 12 major signals, and that wasn't anything from trying to narrow them down. It was just going back through charts and seeing what happened at the peaks, what happened at the valleys that showed reversals, and the 12 major signals came up over and over and over. The other 50 or so that are out there don't occur often enough to spend mental time and energy trying to learn them. If you learn the 12 major signals, you're going to now be able to much more accurately assess the price moves, knowing what these signals represent, indecision, and then the decision, and then again, look at the other indicators that you add to your analysis. The fact that it came up through the T-line with a buy signal tells you the probabilities you're probably in wave 1, wave 2, wave 3 being the same magnitude as wave 1. Oh boy, you guys are going to be here for a while. I'm going so slow. AMAT, somebody asked today, is it too late to buy? And the answer was no. This was the breakout that we were looking for. There was came up to the resistance level, and then today it opened positive. That told you wave 3 was starting. That's true too. There's six longs and 6 shorts. Deborah, right now I wouldn't be afraid to be buying it because of this. This is what we call a doji sandwich. What is the wave you were mentioning? Okay, I'll go back to that. But a doji sandwich is pretty much a bullish candle, then a day of indecision. And remember what the doji rule is. Well, learn what the doji rule is. The price will usually move in the direction how they open after a doji. Makes it very simple. If you see this setup and they open it positive, you could be buying because you know the probabilities are pretty strong that you're going to be heading higher. I will look at AMAT tomorrow. So this is wave one. This is kind of wave two. Now we're going into our next wave. And this wave right here is usually about the same magnitude as this wave right here. Has nothing to do with Elliott wave. I'm a swing trader, so my trades may only last anywhere from 2 to 10 trading days. So I'm looking to see what the probabilities are of heading in this direction with that magnitude. AMAT. Got a fry pan bottom. So look what's happening here. A doji today. Excuse me. If it opens positive tomorrow, what do we got? A doji sandwich. And what do we expect from a doji sandwich? If it opens positive, it's going to trade positive. If it does a doji sandwich, our expectation is that there's going to be more upside. How likely will a stock repeatedly have a set of wave 1, 2, 3? Oh boy, I'll find you some. I'm not even sure if Blink didn't have wave 1, wave 2. This was more of a wedge breakout. Now going into another wave. So yeah, but that's moved away from the T line. Let me grab a few more here. So this is where you observe the obvious. Wave 1, there was your sell signals, closing below the T line. Where did it move to? Right smack dab to the 50. Now, how could we tell that this is probably where they were buying? Because there was a doji down here. And what do we see after a doji? Positive trading. What do we have going on? Wave 1, wave 2. And we can see in the oversold area that people were buying at that level, closing above the T line. That makes for a high probability trade setup. Usually there's a pullback after the third wave, probably, but see if I can find one here. If this was wave 1, this is wave 2, and this is wave 3, when I see this happening, now I say this is wave 1, this is wave 2, and this is wave 3. I'm not counting wave 1, 2, 3, 4, 5, A, B, C, retracement. I'm looking to see what the signals are telling me and seeing if that's another wave. I took profits today on net. I think I should have stayed. I think you should have. Now, I told the chat room one time that if this looked so good that you sold everything except this position, then you'd have nothing but net. I thought that was pretty funny. And it doesn't matter what price you're trading. Well, in this case, look at your fry pan bottom, look at your J-hook pattern. High probability, this one's going higher. Oh, trailing stop? Yes, you can see that in something like this. That once you get up in the overbought area, I start putting my trailing stop at the previous day's open. Because logic says, if I'm in the overbought area and they have enough selling pressure to come down through that level, close out the position. So this is why I want to kind of show what you should be buying. This is why you want to understand what a signal tells you, an individual signal, and what a pattern tells you. Look at your big fry pan bottom breakout. What creates a J-hook pattern? A prerequisite strong price move. What is the nature of this pullback? Well, you can see the buying was huge. Boom, boom, boom. Look at the pullback. Indecisive doji, indecisive, indecisive, indecisive. Where? Right back to the T-line. And then they trade positive. What's that tell you? More than likely, that's your J-hook pattern. You're going into wave 3 because the selling was not very, very convincing. So before I get too far off track, remember, now that I'm off of the when to take profits, is this the Becky? Are you there? If you want to, one is for the members price, one's for non-member price. Now I think we always have it structured that you probably come out ahead. That even if you've paid $97 to become a member for 30 days, that you're going to save money on the training session. Plus you get 30 days. And again, we're not trying to show people how to make huge profits. We're trying to show people how to put their money in positions where the probability of getting into good trades is highly in your favor. And there's probably a lot of people in the chat room already that during the day you can sit in the chat room and see what they're recommending or even ask questions of why that's a good pattern. Because there's probably a lot of people in the chat room that can pick out better trades than I can. But I put out 2 or 3 stock picks every day, not so people have picks, so people can see the video and see what the rationale was for those picks. How do we know that a bearish day is just a blip and not a turnaround? Well, as you can see even in this one, look at the nature of the pullback. Indecisive, indecisive, indecisive. That's where the visual analysis allows you to make much better decisions on when to get back into a trade because you could see what the nature was of the selling. Let's see. Did I do? Oh, yeah. So this one is right here at kind of the breakout area. This would be a wave 1, kind of a wave 2 wedge going into wave 3 on positive trading. So essentially what we're looking for are the situations, the setups that we know because of human nature are going to have an extremely high probability of making money. This one, UAVS, didn't know what they did, but I think they're the ones that have the clone delivery service. Did I do Sava? Sava, very simple. There's kind of your scoop pattern. There's your doji above the 50. If it opens positive, what's it telling you? A doji sandwich breakout. Where's your next likely target? Up here to fill the gap. Drones, that's the word. That's what I get for drinking this early in the evening. And Pola, another one. Wedge type setup, about ready to break out into new territory. So a lot of these, here's a scoop pattern. What do we know about the scoop pattern? Look at our doji sandwich. Bullish day, doji, simple doji rule. If it opens positive, it's going to trade positive. Then look what the pattern is setting up. There's a scoop pattern. And what do we expect from a scoop pattern? A big slingshot effect to the upside. So essentially we're putting our money into situations where we know what the probabilities are. Look at the wedge formation forming on LAZR. And all you really have to do is kind of visually see, and I can do this. You kind of put your trend. But if this breaks out to the upside, that's going to everybody who's watching the trend formations, if we see a strong buy signal and it breaks out to the upside, that's pretty much telling you that's where everybody's piling in. We did that same thing over here on Blink. Look at the buy signal right here, and then it broke through this level. That gave us our next move. Oh, I start drinking early in the day. So what do you do? This is another thing we kind of, and this is only from years of experience. If you've got a slow curve, this is what we expect on the breakout, a big price move. Now, does it occur in one day? Definitely not. But that slow curve setup tells you get ready to buy, because it could be moving like this. In this case, it puts you in situations where yeah, you're going to be in the right place at the right time. About how many waves can be expected? As many as possible. It doesn't matter. You might trade one stock, wave 1, wave 2, wave 3, and then go on to another one that has another waves setting up. There's Jeff. I think on our website somewhere we've got all the formulas for putting them in whatever trading or software scanning software that you have. You know, that's it's like a calendar clock. So what does that ring of the bell? Oh, it's supposed to be 9 o'clock. It's running a little bit fast. Now I forgot what question I was answering. Oh, what are the parameters? All you have to do is put your formulas in. It's all very simple. And the nice thing about candlesticks is a lot of the formulas are already preset on a lot of these scanning softwares, whether you're using Thinkorswim. We're going to be setting up with TradeStation. Ninja Trader has them. Metastock has all the scans, our formulas. So we work with them for quite a few years now, where they the charts automatically show you what signals or patterns have set up. Now I forgot. So we also know what to do with this type of trade. If this opens down here, you close it immediately. If it opens here and starts trading positive, you look for a 45 degree, which is a kind of a steady uptrend. Same thing on this one. Look at your slow curve. There was your best friend, which was doji, 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 gap up. Now, again, rhetorically, do we always get big moves like this? No, but if we know to buy right here, knowing that this is forming a J-hook pattern with a best friend, your probabilities of being in this type of trade is dramatically improved. Oops, I don't know why that didn't come up. And it doesn't matter what price you're trading. Well, why is that one not coming up? Because I typed it wrong. Somebody's terrible handwriting. There's your doji sandwich. There's a fry pan bottom. There's your classic pattern, a J-hook pattern. And look what happened right here. A bullish engulfing signal right smack dab on the T-line. You could be buying right here with the expectation that this move right here was going to be approximately the same move as this right here. Now what do you got going on? A pullback, and look at your buy signal right here coming back up through the T-line, followed by a doji sandwich. So even if you're a day trader and you see a setup that looks like that, and you know that if it opens positive the next day, the probabilities are pretty strong it's going to trade positive, and not only trade positive, but probably with the same magnitude as that, creating a doji sandwich, which is a big candle, a doji, big candle, with the doji sandwiched in between. And what do we expect from that doji sandwich? More upside. What's that tell us about this pattern? Now we have maybe a wave 1, a wave 2, going into a wave 3 being this magnitude. Joey, yes. With Thinkorswim, we've got some of our formulas over there. I tried to set up scans, or we've got our scans where you can kind of automatically put them in there, but it's still difficult to work with. And the reality is, if you're a trading platform, you're probably not going to put as much time and effort into your scanning softwares. If you're a scanning software company, you're going to put all your efforts into the scanning. So I tell people it's probably worth the extra $30, $40, $50 a month to go with somebody like Metastock or TC2000 to do your scanning, and let the trading platforms do your trading for you. We're working with TradeStation right now. As a matter of fact, I'm going to be asking people in the chat room tomorrow who's trading or using TradeStation. TradeStation wants me to get on with their program and show how to do the scans and the charting. Would a best friend doji gap up include an opening gap, or does it have to be the actual gap on the chart? HP, I don't understand that question. Include an opening gap, or does it have to be an actual gap? Well, meaning, does it have to open up above this level? No, it just has to kind of open stronger. I don't know whether we did some for E-Trade a few years back or not. Let's see, did I see? Do you enter one tick above high doji? It depends on how aggressive you want to be. If I saw this opening positive and start moving positive even before it got here, I'd probably be buying. If I want to be a little bit more conservative, yes, I'll buy as soon as it goes up through that high. For Ameritrade, yeah, I think we'll bet we have done it through Thinkorswim. All right. Did I see somebody ask what a J-hook pattern is? If I've missed your question, ask it again. I'm trying to get through. We've only got another, no, not too many. CDXS. There's your left-right combo. There's your inverted hammer. There's your J-hook pattern. Again, the probabilities, because of that buy signal right here at the T-line and about ready to break out, tells me if this trade's positive, I want to be buying it because there's wave one. Look at this wave started with a doji gap up through the T-line. J-hook pattern. What do we have there? Kind of wave one, wave two, wave three, somewhat the same magnitude as wave one. So this is not rocket science. This is just identifying the patterns that human nature produces time after time, and the Japanese rice traders kind of illustrated it for us. So we don't have to figure out what those patterns are. All we have to do is learn them and know how to use them. There's your classic pattern, fry pan bottom, J-hook pattern, a somewhat doji sandwich. That would anticipate there's more upside. This one is OEG. And the reason I'm showing these patterns is right now with this market, the investor sentiment building up, you definitely want to make hay while the sun shines. Here's a kicker signal. Opens here, closes here. They gap it up above the previous day's open and goes this direction. They've kicked the investor sentiment in the opposite direction. You can see which way this trend is going. This just adds to the probabilities that you're now coming back up to the top of that trend channel. After a strong up move, stocks pull back, could be setting up for a J-hook. Instead of a J-hook, could it turn into a fry pan bottom? Is there a rule to determine whether it is a J-hook or a fry pan bottom? No, they're two completely different things. Which one was the, I forget. Fry pan bottom is usually a strong, that's not what I want. I'll come across that, yeah, fry pan bottom is slow rounding. A J-hook pattern is usually after a strong up, fry pan bottom is usually at the bottom of a trend, whereas a J-hook has the prerequisite of a strong price move and then a pullback. That's not, I wouldn't consider that a J-hook pattern, but I'd put it into the same classification. No. No hesitancy in trading the SPACs because it doesn't matter whether you're trading stocks, bonds, currencies, commodities, tulip bulbs. Anything that has fear and greed is going to work with candlesticks. Candlesticks is not for a specific trading entity. Candlesticks is basically identifying what the investor sentiment is trading that entity. Here's another one. CVAC. This one at $100, bouncing up off the 50 up through the T line. Wave 1, wave 2, likely wave 3 with that strong move. That's the type of thing that you can go after with option trades. Carrie, I haven't ignored your question. I'm waiting for a chart to come up to better demonstrate it. Whoops, and I don't. Does J-hook equal cup and handle? Usually a cup and handle is a fry pan bottom and then a flat pullback. A J-hook pattern, again, is after a strong up move and then the pullback, and then it starts back up again. Even though the doji was bearish, which one was that for? AA. So this is what you would call a classic pattern. The fry pan bottom, breakout. I don't know what this is, so we'll get rid of it. And this, we'll get rid of it. But look at the pullback. Oh, pshaw. And look where it came to, right smack dab to the T-line and started back up. So that's the classic pattern. That's a J-hook, because it looks like a J-hook. That's your fry pan bottom breakout. That classic pattern is combining the two. A fry pan bottom strong price move followed by a J-hook pattern. Yes. So that's kind of a fry pan bottom, but it also could be put in the classification of a J-hook pattern. Wave 1, wave 2, now going into wave 3. And it doesn't matter what you call it, just as long as you can recognize what's happening. You're putting yourself in high probability situations where the trade is likely to go in your direction. Yeah, so a cup and handle is usually a fry pan bottom that's flat and then has a fry pan bottom, then it has a quick pullback and then starts back up. Whereas the classic is a fry pan bottom with a strong price move, the pullback, and then the next price move. But Yeah, so Alcoa is hitting new highs. Chris, I usually use a 10-minute chart on my intraday trading. And then as soon as I see the 10-minute chart starting to set up, I'll flip down to the 5-minute chart to see if it's still confirming my confirming my 10-minute chart. And we can do a day trading session again soon. But look at your big fry pan bottom, your big move to the upside. This is flux. And there was your morning star signal with an inverted hammer. Now, the inverted hammer is one of your most relevant individual signals. Through the years, I've discovered that if you see an inverted hammer and it opens positive the next day, you've probably got a 95% or greater probability you're going to be in an uptrend, which basically tells you here's your classic pattern, fry pan bottom, J-hook pattern in progress. It's just an extremely high probability pattern. Then look what follows, a morning star signal with the inverted hammer in it. How do you know which high ends wave one? You'll see a sell signal. That's why you want to recognize when it's time to sell. Over here, this trend ended with a hanging man trading lower the next day. Where do you think after that sell signal confirmed your next target was? Back here to the T-line. Right now, we got a wave one, wave two, wave three. We haven't had a sell signal yet. Now we do have, let's get all of these lines. We are getting up toward the top of this range, but look what's got us there. A piercing signal, one of the 12 major signals, a close above the T-line, a gap up, stochastics coming up. Well, you might be too far from the T-line, but remember what your pattern is. Remember, we're not trading the T-line, we're trading the pattern. So if this came up here tomorrow and the T-line was right here, yeah, I'd say let's watch out. Be a little bit more diligent as far as taking profits. So for taking profits, where take profits? Or see, if this gapped up again tomorrow and was trading way up here and the T-line was here, yeah, I'd probably be a little bit more diligent as far as going to my 10-minute chart and making sure the profit taking didn't start because of the magnitude of the move away from the T-line. Becky, put in the links again. This is kind of important information, and this is the information that most people don't really get a lot of training on, is when to take profits. That's one of the links. So that's just as important to figure out if you're in a winning trade but it hasn't closed below the T-line yet, when is it time to start taking profits? When the probabilities start going against you, you start seeing sell signals, stochastics start heading down. What that pretty much tells you is the bullish sentiment is starting to drift away. If I see something like this and I'm thinking, oh, we really haven't closed below the T-line, but we're not going anywhere, let's take the profits and let's go back and find a chart that looks like this. How do you consider the Dow, S&P, and NASDAQ for positions? Very quickly. Meaning in a matter of 15 seconds, I can pretty much tell which direction we're going based upon the stochastics and a breakout. All I really need to know is that we're still in an uptrend because we're above the T-line. So if I wake up tomorrow and the pre-market futures are showing the Dow's going to open up another 80 points, I know we're still continuing the uptrend. Now on this day right here, I would have scanned to have both long and short positions ready to go. That if they had opened lower and started trading down, it was time to start adding shorts to the portfolio. The fact that it opened and immediately started trading higher told me, wait a minute, they're not selling off right now. What chart was the inverted hammer? Oh, no, I don't remember. Was it Flux? Flux. And the reason I've put this one in is because I'm sure this has something to do with powering cars with the flux capacitor. Oh, I can't remember the exact flux capacitor. All right, a few more, and then we'll take on individual stocks. There's BWEN, fry pan bottom. Look at what happened. Look where it closed on this day, right on the T-line. Again, why is that significant? Because nobody has the T-line on their chart. Then they did a bullish flutter kicker. Look where they opened it, right at the previous day's open, and went the opposite direction, but did a doji. And then they opened positive. What do we know about the doji rule? The flux capacitor, that was it. We know that if it opens positive, it's going to trade positive. If it trades positive, what type of signal do we have? We call this a bullish flutter kicker. Because if you took out this little flutter, you've got the kicker signal, which is the strongest candlestick signal. Oh, on flux, this is the inverted hammer. This one right here. And it's where the bears are happy, and then the bears say, whoops, wait a minute, the bulls are stepping in, but at the end of the day, they're relieved. And then the next day, they open up positive, and they say, shoot, the bulls are still here, let me get out of my short positions, and the buying starts. I think, is this one of the SPACs? There's your doji sandwich. What's that telling you about your trend? You're still in a good, strong uptrend. SLS, you could buy this one. You can see the signals, the buy signals off the 34 up through the T-line. But what makes this significant? If it moves back up into this area, look what the magnitude of your return could be. 50%, 100%. And again, if we're going to be buying or putting our money at risk, we might as well be investing in things where the probabilities are extremely strong that we're going to make good money because of that analysis. The opposite of an inverted hammer, if you took the inverted hammer and put it at the top of the trend, it becomes a shooting star. Or the opposite psychology would be a hanging man, where you have a small body at the top and a big tail to the. Look at your little mini scoop pattern, and where did it break out? Right through that level. What's that tell you about this area right here? That's broken. We're now into the next wave. Bean. That's not what we want. Might be bean. Bean. I keep telling people we were so poor when I was growing up that if we wanted to have a bubble bath on Saturday night, we had beans for dinner on Friday night. Big fry pan bottom. We're just about ready to come out of this pattern. If this opens positive, what's it tell us? We're in the next wave to the upside. And I don't remember, was it this one? No, I forgot. There's your kind of your inverted hammer doji, bullish confirmation. Again, the probabilities are pretty strong that if this opens positive, stochastics in the oversold area, you're going to have more upside. What did you say about when? Oh, that if I was in this, it would start to do this. Stochastics were heading down. Bearish left-right combo. We haven't closed below the T line. I'd probably close it out because what's my probabilities now? They're getting pretty diminished. Stochastics heading down. Not any conclusive sell signals, but I'd rather take that money now and go back and find a chart that looks like this that's just starting the uptrend. Now, as of right now, yeah, I still wouldn't be buying this one because you don't have a signal here and you still haven't been able to get above the T line. This one is still in a downtrend. Yeah, that was the doji sandwich after the breakout going into wave 3. Is each wave determined by price going back to the EMA that would end a wave and then goes up 8? It's not so much that it's determined by that. Again, if you go back to the aspect that nobody has the T line on their chart, we can see exactly what investor sentiment is doing at that level. Okay. Is when a short option? You could. Now, yeah, if this opened lower, so there's always going to be charts. We recommended shorting when a couple days ago because there was your bearish left-right combo. And then look at the doji best friend gap down through the T line. And this is the one thing that everybody should have a sticker on their screen saying if it closes below the T line, the probabilities are extremely strong. You're going to be heading further down until you see it come back up above the T line. With prices of stocks ranging from a few dollars to hundreds, what size account would you need? How many shares are you buying and options better? Usually I'm buying, yes, if I've got a $100 stock trade, I'm going to probably go after the options. Now, the dollar amount doesn't matter of your portfolio. And this is a whole different training, but I usually keep all my positions equal dollar amount. So obviously, I'm buying 100 shares of a $50 stock if my average position is 5,000. But I keep it equal dollar amount. And the reason for that is our biggest bugaboo for lousy trading is our own emotions. So if I have each position an equal dollar amount, every time I look at a trade, I say to myself, is this unit of my portfolio working or should I close it? As soon as I decide, boy, I'm really going to add up or build up on this one, and if my normal position size is, let's say, $50,000 a position, and I decide I'm going to buy $100,000 of this one, you can bet your dime to donuts I'm going to spend 90% of my time watching that $100,000 trade and just kind of disregarding the other positions. If they're all equal dollar amount, then I have equal decision-making process mentally to get out of a trade when it's not working. How do you determine your risk for trade? that if I was going to buy something, I already put a star next to, if I was going to buy this, I'm calculating that this one has moved from 3 to 7, 4 points. That means this should move approximately to $10. That's my calculation. And then I know where my stop loss is going to be. If I buy right here and it closes back below the T line, I close it out. So before I even put on a trade, at least I can visually sense where my stop's going to be and where my upside potential is going to be. That's true too, yep. If you've got one trade that really slams you, it's not going to, so on a bad hair day where I've got a position that goes against me dramatically, more than likely my other 9 positions are working well, so that one bad position with a big loss isn't really doing all that to my portfolio. Would you buy 10 options? John, what's that? Oh, no. I would, that's a whole different, yeah, we have an option trading room, so we might do a few strategies. We might be buying the 7.5s, or at this point, maybe the 6s, and then maybe a 7 and selling the 9 spreads based upon what we expect the price move to be. Pretty much, Joe. If I've got, yeah, whatever size my account is, more than likely it's 100% invested. Because if I've got 10 equal dollar amount positions, more than likely I'm going to have way more than 10 good positions, whether they're long or short. Now, what that also does is, at the end of the day, when I go through 10 positions, which takes a matter of maybe less than a minute, I can say, well, this one doesn't look very good. If this opens lower tomorrow, I'm going to close it out. And I've got 3 other ones over here that look excellent. I'll just move my money over there. Because that puts me in a position where I've always got more good trades than I can handle. So if I've got one that doesn't look good, close it out and move to a better one. Jimmy, yes. Well, Joe, it doesn't necessarily mean I've got 10 long positions on. I might have I might have 8 longs and 2 shorts. So I'm really not maxed out. But even with those shorts, that's kind of my hedge. I'm not using those as a hedge. I'm looking at those short positions that even if the market's moving up, that I'm short something that's more than likely, based upon candlestick charts, is going to work. It could be me just stuttering, AA. All right. Okay, with that, I guess, Jim, let's go ahead and do the double line. Is candlestick merit? And in 3.2 seconds, do the next double line. I can't even stop the scrolling. Oh, I don't even know where we are now. Oops. In candlestick merit. I don't know. Matt, you got me there. I don't know what that means. Okay, let's try to go through these quickly. All right, thanks, Gary. Right now, look how it sold off today. It opened here and closed here. Where did it do it? Right here. That's a little bit of a warning. But if this opens lower tomorrow, you probably want to close it out because that's telling you they've resisted at the resistance level. Las Vegas Sands. I wouldn't be long or short. That one has absolutely no direction. Advanced Micro. This one you can get ready to buy. It's not a real strong chart. I probably wouldn't buy it until it breaks up through this level. But it's still not a real good chart. And I say that because there's probably a ton of better ones out there. F-SLY. Oh, I know the ones that I didn't even get to. F-SLY, if I was short, here's how you know when to take profits. You're sitting smack dab on the 50 area with stochastics in the oversold area. You simply put your stop right there, because simple candlestick logic says if they have enough strength to come up through that level at the 50-day moving average in the oversold area, the probabilities are going against you. You want to close out. I forgot to do Tesla. Yeah, we did Tesla, still in an uptrend. And Apple. Apple did the inverted hammer bullish confirmation. If this opens positive, you expect Apple to be doing a J-hook type pattern still in an uptrend. And Roku, which we don't look at very often, but it had a strong signal. There's your kind of your J-hook pattern. Worst case scenario, expect that 45-degree to continue. All right, now I can get back to that one. You get ready to buy that if it breaks out through that level. ONTX, nothing. If you bought on this day and it opened here, you close it out immediately. The probabilities are this one's not going to head back up until you see the next buy signal, or you don't buy it until it comes up through that level. What was the other one that we got into? I was showing this as an example to my brother and said, this is what you're looking for. Let's see if I can make this big enough. But it just broke out, and it was trading up here. And I said, this is the type of breakout that we can look for, identify something new happening in a stock. And then the next day it came up here. Look where it pulled back to. That magic line of the T-line, we're still long. He bought it at 72 cents, and it's trading up here at 280. It's been as high as 350. But as long as this stays above the T-line, you can stay long because it's pretty much telling you the probabilities are it's still in an uptrend. Now you can see what the nature of the signals are up here at the level that it topped out before. Indecisive. Very simple. You use the T-line or the doji rule. If this opened lower tomorrow, I'd probably close it out and wait to see what it does at the T-line. So essentially it has to open positive and trade positive. VR or VXRT. We made good money on this one. Look at your Morningstar signal, gap up. It ran pretty good until your dark cloud, another one of the 12 major signals, it was time to get out of that position. Right now, you could be buying this one. I don't know how the lines keep showing up on each one of these. But you definitely want to buy this one on strength. SPWR, we recommended today. It didn't do anything and right here at this level. But if this trades above today's open, the reason we were going after it in the first place was there's your best friend signal, doji gap up, and doji gap up above the T-line. And what type of pattern is it setting up? Kind of a J-hook pattern. So we didn't buy it today, but if this opens positive and starts trading positive tomorrow, that's when you start buying it. Big lots, nothing to get excited about there. I probably wouldn't be long or short on that chart. There's nothing to get real excited about. And RK, another J-hook pattern. I'd be ready to buy this one on positive trading. RDFN, that one you can get ready to buy. That's a good looking chart. That one I'd buy on positive trading, expecting the classic pattern. Twitter, you can go short if it opens lower tomorrow. Then just make sure you, now if I was going to go short, I'd probably put a sell stop at today's low, because if it comes down through there, that's the direction they're taking it. More than likely, with a lot of juice left in the stochastics, they're probably heading back down to the 50-day moving average. Shopify, is this a J-hook setup? Yes. That one I wouldn't be afraid to be buying if you like trading that stock or going after the calls. What is that one? Whoops. That BLRX. Nothing. Nothing until you see a confirmed buy signal. We've been in lithium, and that one has to get up through the T-line. We've owned lithium for a while, kind of on the idea that this is a steady eddy, and now it's starting to pick up steam. So if it starts to get too far away from the T-line, we'll start taking profits. Space, if I was going long, it would have to open positive tomorrow to confirm the dojis. And Watt, this one would have to open positive, breaking out through this level. Not a real clean chart, but you can see they're coming back into it. We recommended this one today on the positive open. It was up pretty hefty, but you could see how it was setting up. There's your little slow curve. There was your fry pan bottom. There was your breakout. So we were buying this one on the positive open. Somebody asked, should we be buying here? And the answer was, yes, that's exactly what we want to see. Is it gapping up, or especially seeing it gap up, that you want to be buying. Now, did you expect to have it go up that far in one day? Definitely not. But back to the rhetorical statement, it puts you in positions where the probabilities of being in the right trade is greatly in your favor. This one I'd be buying also. Kind of a doji sandwich setup, especially if it breaks through this level, this little downtrend. SRNE, another one you can see where the bullish harami, little hammer, doji, bullish confirmation. If this trade's positive, I would expect at least seeing it come back up to this level. CBAT is what we call a message. And the message is it gapped up, but traded off, not looking good. But what was the message? They gapped it up. It was a strong move. I think it's trading up here after hours. This one will probably be recommended tomorrow if it's trading positive. Because what happens after this? Usually the profit taking's over, and the strength of this move now starts moving it up in a steady uptrend. Rite Aid, another one you can buy if it opens positive tomorrow, giving you a doji sandwich breakout of the T-line after bouncing off the 34. Where's your next likely target? At least up here, which gives you about a 25%, 15% upside, but then you've got the capability of having that type of move. And band, if you were short, get ready to cover the short. Whoops, let me read what you're saying. With a bullish harami in the oversold area, do you wait to see more evidence closing above the T-line before you would buy? I probably would. And the reason for that is this probably, if it bounces, could come back up to the T-line. So if I was short and it opened positive, it would cover the short. I probably wouldn't go long until it comes back up through the T-line. And the reason for that is, right now you've probably got 50 excellent trades out there that you don't have to buy something and you still have to wait to see if it's going to work or not. WWR, if you're long, you stay long. It's trading up in this range after hours. And IDEX, that one you could be buying on strength. Jemiah, nothing there. Even though it's turning up, it's not turning up with any signal. So if there's not a signal, why go after something that the Japanese race traders haven't illustrated as being a strong move, especially right now when there's so many other good trades out there? That's not a signal at all. It's not a kicker signal. Some people are calling that one white soldier, which in all the years that I was learning candlesticks, one white soldier is somebody's makeup signal recently. It's not a candlestick reversal signal. Conoco, you can see the flat trading. You can be buying this one, especially if it breaks out through this level. Dropbox, that's a bullish engulfing right off the 34, closing at the T-line. Now, if this opens positive tomorrow, what's the two pieces of information that it's telling you? One, it's confirming the bullish engulfing signal. And two, it's telling you the T-line is not acting as you want to be buying it. Home Depot, nothing. Would not be long or short this one. Not going anywhere. This Nautilus, that one you could buy on positive trading. Then the next target would be trying to get through this level. And KLR, oops, I don't know what's happened with that one. Let's see, we did those. We did Jemiah. Is this a repeat? Jemiah, there's not a bullish candlestick buy signal day, but it is big green candle closing above the T line. Not the right time to pull the trigger. Yes, your analysis was correct. It's just an up day. It might go up further, but I'd rather buy a signal. There's kind of your bullish engulfing, or worst case scenario, a piercing signal. That's just an up day. There's, as I say, there's probably 50 charts out there at least that are much better. Kraft Heinz, is driving you nuts. Why? If you're long, you shouldn't be long. If you're short, you can stay short. Very simple. As long as it stays below the T-line, you can stay short. Caterpillar. Did a little bearish today. It's probably not one of your better trading stocks. And you probably don't want to try to trade this, but if you're long, you can stay long. You still use the T-line as your stop. All the bank stocks were strong today. Bank of America is up there, but if this opens lower tomorrow, I'd probably close it out. Same thing with Goldman. But the other side of the coin is, as long as the big financial stocks are strong, the uptrend will remain in progress. Microsoft is tough to trade. It just doesn't have any great direction anymore. If you like it, you can be buying it, but as you can see, you don't get very big magnitude of movement out of Microsoft because it is a institutional trader. Matador, JB, why would you think that is toppy? There's not anything that's telling you there's any selling going on. I would stay long on that one. We're staying long on Apache. Wouldn't be afraid of Occidental. Yeah, the oils are working well. Peloton, that one, if you like it, you can buy it. You can see kind of the classic pattern setting up with a little Morningstar type signal. You could be buying this one. Coca-Cola, you stay short. Look at your bearish kicker signal and a close below the T line, followed by a bearish doji sandwich. Where do you think your target is that everybody's watching? Down here at the 200-day moving average. BT, no. If this opens lower tomorrow, close it out. That was your warning. When they gapped up that far away from the T-line, high probability it's coming back down to test it. If you're long, it has to open positive and trade positive to stay in it. So, Deborah, have you ever heard anybody's brother listen to them? Is this? That one's not coming up over here. Overstock. Overstock, you could be buying, but it wouldn't be top of my list because you can see what happens when it gets to the 50. So you can buy it, just watch to see what happens at the 50, but I'd probably be elsewhere. And Marna, you couldn't get ready to buy this one on positive trading, getting through, it's above, let's see, where did it close? Close back down. I wouldn't be buying this one yet unless it comes back up through today's open. And Solo is probably the weak sister of all the electric vehicles. This one is the least one I would be going after. There's just too many other solars that look, or electrics that look a heck of a lot better. a gap up from the oversold area is good. A gap up in the overbought area is telling you start watching to take profits. We can do a session on gaps. I mean, gaps and candlesticks. Everybody always says stay away from gaps because you don't know what they're doing or what they're doing with the price. Gaps with candlesticks are your best friends. They tell you when to get in, and if they're gapping up away from the T-line, you get ready to start taking profits. So what was that? BTWN? You could be buying this one. You can see how it's supported at the 34, close above the T-line. You definitely need to see strength in this one. I guess that's a fairly new offering. And PTE, I've kept you all the way past your bedtime. Nothing here yet. You are in a fry pan bottom. Now, the simple rule of a fry pan bottom is if you're in it, you stay long until you see a sell signal and a close below the T-line. On this one, if I was buying, I'd buy at this level, knowing that it's supported at the 50 and breaking out. It's still not a real pretty chart. It's 96 cents. Oh, so it's up here? All right, so that means it's at least going to the 200. The T-line work on the 5, the T-line works, it's called fractal. T-line works on the 1 minute, 5 minute, 10 minute, just as well as it does on the daily, weekly, or monthly. So I could change any of these charts, find one with a range, and flip to the 10-minute chart. They're all exactly the same because human nature works the same way no matter what time frame you're working with. Band is not an inside day. What's an inside day in Western terminology? It's called a bullish harami, which means pregnant woman. There's her body, there's her little belly sticking out, and it tells you the selling has probably stopped. Are these daily charts? Everything we're looking at is daily charts, yes. Jemiah? Yeah, there's nothing there. We did Bank of America. Let's see, Domino's. Nothing. If you're nothing. Nah, that's just not a tradable chart. RK, yes, great, going to go to midnight. Now we'll be done here in the next 10 minutes. So ENPH, you can see the slow curve. Wave 1, wave 2, going into wave 3. I'd suspect there's another 20 points to the upside. NVIDIA, nothing chart. Bah. That's a nothing chart. Which way is this going? No idea. Take your money and find a chart that's much easier to analyze. I don't know what this one is, but it's not working. Nike. That one you can be buying. It's not real energetic, but you can see that it's staying above the T line. Kind of a doji sandwich, so it's probably got more upside, at least going to the top of the trend channel. Beyond Meat, stay short. I say stay short, but you've had a bullish Harami doji, which makes it very simple. The doji rule. If it opens higher, close out the short position, but I wouldn't be going long on this one. Matt, I don't know what that is. That one, you stay long. This is the financials, but you can see it did a doji. If I was trading this, I'd probably have a sell stop somewhere down here, that if it came back down through there, they're taking profits. Fubo, nothing. If you were short, probably would have covered the short. You're in the oversold area, you're showing indecision, you're staying above the T line. So right now, I wouldn't be long or short this one. This one is another one that you could be buying because of this. This is called a trend kicker. Notice the trend has already started. They opened it here, closed it here, gapped it up, and went this direction. That implies there's still more upside. And if there's more upside, that tells you this pattern is going to be wave 1, wave 3, at least bringing you up into this area. So that's where we called, what you can do is put 2 plus 2 together, that you can see the signals telling you there's more upside and the pattern breakout is more upside. And Janik, I'm guessing you wanted pen. Nothing there right now. These charts are CQG. And that's the reason we use them. Unfortunately, it costs about $1,300 a month. They were the grandfather of the charts. And a lot of the charting services that you see, like in Metastock or some of those others, use this as their feed. And BlackBerry, that's one you can be buying, as long as it stays above the T line. Yeah, so this is why, and this is another way we close out positions. If you're in an uptrend, and you're up in the overbought area, if they open it below the previous day's open, there's only one thing you want to do, is hit the sell button as fast as you can, because that's not what the uptrend should be doing, gapping down below the previous low. You're starting to see Tesla pick up some steam. Get ready to take profits. We did that before. Let's see if I can find that. where a lot of guys in the chat room had Tesla. And you can see what Tesla did all the way up. Didn't have to worry. Stayed above the T-line, stayed above the T-line. When did you start thinking about selling? When you started moving away from the T-line. And when you were moving away from the T-line, where did you take profits? Up here, knowing that you're that far away from the T-line, you start going to your 10-minute chart. So this is just simple logic put into candlestick charts, which is just investor sentiment put into a graphic depiction. So if you're starting to move too far away from the T-line, you get ready to start taking profits. Okay, I told you all you would be getting butt sore tonight. XLP, nothing. Sideways. Aqua, stay long. J-hook pattern in progress. All right, let's see if... Let's see, was it KLR? Yeah, for some reason KLR is not coming up. Don't know why. We did Domino's. Watt, we did. You could buy this one on positive trading. Yep, cows are already home. eBay, nothing here. If you're long, you can see it's having trouble getting up through this level. If this opens lower tomorrow, you were long, I'd close it out. There's better trades. That's what you were looking for. Sedge. You stay long on this. And DraftKings, right now there's nothing there to get excited about. Yeah, just not a good chart. The pale green line right here is the 3 exponential moving average. It kind of works as a confirming indicator for the T-line. All right, I'm going to do a few more and then call it a night. Stay long on what's that? Uranium, all right. Genius. You could get ready to buy this one. Obviously, you can see the cradle type pattern. If this opens positive, you can start going after it. And the small bear, this is the bear fund, which you stay short because of the bullish move in the markets. We did PLTR, flat, would not, well, yeah, still not a great chart. I think we did ENPH. Stay long, but I'd probably use yesterday's close as a stop. CDE, one of the mining companies, stay long, but this one has to open positive tomorrow to break out. ARYO, AYRO, that one you can be buying. That's a good chart. Pfizer, nothing. Would not be long or short right now. Okay. Hope everybody got some good information tonight. Again, next Saturday, not this Saturday, we'll spend a full day on a logical place to start taking profits, even though you might not have a confirmed sell signal below the T-line. Just that's kind of the psychology area that candlestick analysis provides a lot more insight into, so that you're moving your money to high probability trade setups. All right, good, Larry. All right, everybody. Sorry to keep you over time, but I think in this market, you want to make hay while the sun shines, because we don't know what the political stuff is going to do to this market in the next few months. So with that, everybody have a good evening. We'll see you bright and early in the chat room.